With the high interest rates right now, credit score is very important. So in today's video, we're going to go take a look at the loan lady, Kelly Zitlow, while she describes what the number one thing is that lowers your credit score. In today's video, we're going to talk about credit score. We're going to in these rising interest rate environment, in the rising interest rate environment that we're in right now, credit scores are more important than ever. And credit score can affect your down payment, your rate, and a number of things. So in today's video, we're going to refer to Kelly Zitlow and let her tell us what the number one thing that you can do to lower your credit score is. Let's watch now.
Listen up, the number one thing that drops your credit score. Today we're talking about one of the most important pieces of qualifying for a home loan, which is your credit score. Your credit score has many components that can cause your credit score to either go up or down. When you apply for a home loan, one of the first things that's going to happen is your credit is going to be pulled by the lender. This is because your credit score can have a significant impact on whether or not you qualify for a home loan. Today, I'm going to discuss the number one thing that drops your credit score and a few tips on how to avoid this. You may be surprised to learn that the number one factor that carries the biggest weight on your credit score is payment history. I know, right? What factors into your payment history? Well, on-time payments matter. And really, when we kind of drill that down, here's what the crux of the whole late payment thing is. An on-time payment means a payment that's not 30 days late. That's what an on-time payment means. So if your payment is due on the 1st and you pay it on the 5th, but it doesn't get reported 30 days late until, let's say, the 30th, then as long as it's paid before that time, you are not going to have the 30-day late payment reporting back on your credit report. You want to know when these creditors are going to report to the credit bureau. And it's not always just when you pay the payment, because the creditors have their own billing cycle. So you can always contact the creditor and you can ask them at what point they're reporting to the credit bureaus. And that will help you know if you need a little more time to pay, but you absolutely want to pay before that 30-day drop dead date. Now you know the time frame based on the creditor. So the number one thing is 30-day late payments. And I will tell you, I have seen people that have 750 credit score. One 30-day late payment, just one, if it's recent, can drop that credit score 80 to 100 points. That's the impact. That's why this is so important. And it feels to me kind of like, it's like, hello, no brainer, Kelly, but really, it is the one thing. All right, so maybe you had a late payment and you are wanting to buy a home and go through the home loan process. How is that late payment going to impact your home loan qualification? Well, here's the deal. There's a lot of different answers to this. And remember, credit scores are an algorithm, and the lender's going to pull the 3 credit bureaus, so Experian, TransUnion, and Equifax. Not all creditors report to all credit bureaus, so you will potentially see some variation in those scores. But let's say that the 30-day late payment is reporting to all 3 credit bureaus. Then what's going to happen is, because it's so recent to your home loan pre-qualification, it may drop your score to a point where maybe you can't qualify now, but here's how it works. The further you get away from that 30-day late payment, your score is going to start to increase. And from a lending standpoint, you're going to have a better chance of qualifying for a home loan. Now, this doesn't mean that if you just had a 30-day late payment, you can't qualify. It kind of depends on what else is going on in your credit profile. So if you, for example, had an 800 credit score and you had one 30-day late payment and it was last month, and maybe now your score is 700, it doesn't mean you can't necessarily qualify. This is why working with an experienced home lender that really understands credit and the implications of a late payment and the home lending guidelines will really help you with success. Now, secondly, if your credit score is lower, so you had the 30-day late payment and maybe now your credit score is a 700 versus an 800, let's say, it could potentially impact your interest rate. It may impact the home loan program you can qualify for. So lots of things going into this mix. The way that interest rates work on home loans is the lower the credit score, the higher the interest rate. That's just a really good general type of understanding about how it works. But on conventional conforming home loans, the higher the credit score, the better the terms of not only the interest rate, but if you were putting less than 20% down, your credit score is also going to drive the cost of the mortgage insurance. FHA is different and VA doesn't have mortgage insurance, so you don't have to worry about it there. But in summary, the credit score is going to impact not only your ability to qualify for the home loan, but potentially the interest rate too. Here are a few tips to avoid making that late payment. Number one, make an online account with your credit card company and set up an auto payment of the minimum amount that's due every month to be paid by a certain date. That way, at least the minimum gets made. Now, you can always make additional payments if that's what you're used to doing, but at least that minimum gets made, which will make sure that you don't have that 30-day late payment. Secondly, use your smartphone. Set reminders. Call your creditor. Find out when the billing cycle is. Find out when they're reporting to the credit bureaus. And then make sure that you know the drop-dead date. If you're struggling to make the payment, it's got to be made by a certain date and a certain time, because it's not just the date. A lot of these creditors, maybe they're East Coast time and maybe you're West Coast time. If you're missing the payment by the time that the creditor has set, let's say you're on the 29th day and it's 6 o'clock and the cutoff for the creditor is 6 o'clock Eastern Standard Time, and you pay at 7 o'clock Eastern Standard Time, chances are now you're rolling into the 30-day late payment. So really having control and organization around knowing the due dates and actually the time frames. If that's something that you're really cutting it close, you got to know the time frame as well. And tip number 3, if you had a 30-day late payment and maybe something happened where it really wasn't your fault, all kinds of things come up, contact the creditor earlier than later and start to have some discussion. So if it was their fault, or maybe the auto pay didn't post, or whatever, there's a million different types of scenarios. But if there is a 30-day late payment there and it's not your fault, you certainly can dispute it with the credit bureaus. But prior to doing that, just contact the creditor and work through it. Many times, if they can document it was their fault, they'll just remove it. Now, what if it was your fault? You can contact the creditor. You can ask for a courtesy removal of the late payment. It's not easy, guys, so don't automatically think that that's going to happen, but it's worth a phone call, and I always recommend making the phone call. If it was your fault, call, see if they'll remove it. If not, then it is what it is, and you'll have to deal with that 30-day late payment. But remember, every month that you proceed forward without having any 30-day late payments, then your credit profile will start to rebound. There you have it. Now you know the number one thing that drops your credit score and some tips to help you avoid making late payments. I hope you found value in today's video tip. I have a passion for mortgage education, and I would love it if you would share this video with anyone you know that needs this information. Also, do me a favor and please subscribe to this channel. Thank you so much for watching, and we'll see you next time.
So anyway, Kelly's got some great information. You can check out her YouTube channel, kellyzitlow.com. So Kelly's got some great information out there. Check out her YouTube channel. Just go to YouTube, hit search, hit Kelly Zitlow, and you'll find her stuff. Mortgages are more important than ever because right now interest rates are mortgages right now are interest rates right now are very important since mortgage rates are so high. So call someone like Kelly, get pre-qualified with her, let her tell you what you need to do. Even if you're a year or two away from buying a home, start planning now. Get your credit in line, get your credit score as good as you can get it so you can get the lowest interest rate available. Thanks for tuning in. Take a look at some of our other videos. Check out our playlist to find the videos that you're not seeing come up every single week. And please share and like and comment on our videos below. Thanks again for watching.